Okay, this is Brian Stoll for Timing Strategies, February the 7th, the Chinese New Year. Happy New Year to China. Year of the rat. Yes, last year was the year of the pig, and we all have our opinions, especially myself, on how that translated into the stock market. And now we have the year of the rat. So, anyhow, thought I'd mention that. I haven't made any posts for the last almost month now because two reasons. I'm having trouble with YouTube, and I didn't want to go through any more of the headaches at that time, and I also have been sick for 2 weeks, a little better than 2 weeks, so this is the first post. If it works, great. If not, nobody will hear it anyway, so here goes. And I haven't updated the website as well because of some of the same reasons with the being sick. All right, here we have a chart of the S&P using the spiders. As of the close of today, the 7th, we got about a whatever pullback. And I'm going to do some stuff that I don't normally use here in my videos because I'm just that kind of guy. Okay, so we've got 1, 2, 3, 4 down days. Now, what I was looking for was a move off the lows of February the 22nd back up to the highs that we had on the 25th, which the retrace that took us to there, and you can't see it because it's already drawn in. So basically an ABC retrace or bear market rally up to the 1420 level or 142, 143 level on the spiders. We didn't get that on that quick of a move, but we still have this potential to exist right here because we have not taken out that lows deep enough. So if we look from here, from the lows of the 22nd to the highs of the 1st of February and to the lows of today on the spiders, that takes us actually a little higher to that 145 half level. That could be the kind of move that we get. I don't think that's what's going to happen because that's too far up, and if it gets that far, chances are you don't want to sell it anyway. You may not want to sell it if it gets that high, but I'm still very bearish. And what I would look for on a move back up, and again, this is pure idiot wave analysis, is from the highs that we put in on the spiders of the 1st until today's low, what we can see is a retrace from here to here, back down to the lows. I'm looking for that 1280, 1289 level, 128 level on the spiders. So if it comes back up from the lows of today to about that 618 projection, if you can see it right there, that puts us in right at, I hope this works. Now you're not going to see it. That simple ABC pattern. There's a lot of this stuff going on right now, and I don't like to use too much of it. But if you see that level that we've got right now, let me just do it right here, puts us to about the 128.80 level on the spiders. So I am looking for a retrace back up, if possible, from today's, take this magnet off, from today's closing price, potentially a little higher, all the way up to about 136.50, 136.75, which would hit that level right there, just enough to get us out of today's highs range and trigger a potential short-term buy signal from a lot of the regression trader systems and such like that. Hit us up to the 136.60, 136.75, and then from there, we'll see. But in that situation, it would put us almost perfectly in line, and I can't give it to you exactly right now, but that would give us a perfect boom slam right back down to at least test those lows of 1280, 128 or 1289, 1290 on the spiders. I'm actually looking for a much deeper low. I'm looking for this low to get washed out. And actually, once it takes that low out, if it does, if I'm right, I have no idea if I'm going to be right or not. But I anticipate this low to get taken out over the next 3 to 4 weeks, maybe even sooner than that. And if it happens sooner than that, it'll be a much stronger potential short-term buy signal that could take us higher back up into that range. But as of now, I am short for the Ridex accounts, magically enough, and it hasn't been posted yet, but I am short from this level right here. Regrettably, which is Monday's open, or Monday's close, excuse me, which is right there, 35%. God, you never have enough of your winners, but risk management was dictating that I was going to go as high as 50, but I erred on the side of caution for 35. We're sitting on a 35% short position in an indice basket. Real quick for anybody else that might be Looking at other XLF things that we track, the financial XLF ETF, still a dirt dog rally. If you want to look at the XLB, you know, we're getting, I think, deflation. The Rio Tinto deal with BHP Billiton, that's keeping this sector alive for the time being. And for all you gold bugs, and again, I'm a closet gold bug, we've got a very strong potential for a setup on the GDX tomorrow or the next day. That means if we can trade back above the highs of today's price bar, you want to get long. If we get and we trade below the lows of today's price bar, real easy setup. You want to go flat, not necessarily short, but you don't want to own too much of that stuff, because today is a perfect kind of line of scrimmage for that GDX. Alright, so I'm not going to go on to too much, and I want to make sure that this thing works, so I wish everybody a good evening, good afternoon. Please send me an email if you'd like. I love hearing from you. And have a good night. Happy Chinese New Year. Year of the Rat.